last month, beating economist estimates of 180,000. The unemployment rate ticked down to 3.5%, matching September's level for the lowest reading since 1969. Manufacturing, hospitality, and healthcare all saw strong gains last month as well. So joining us now for more reacts is American Action Forum's Director of Fiscal Policy, Gordon Gray. And Gordon, just want to get your first instant reaction to the strong jobs report, 2 consecutive months of topping expectations.
Yeah, absolutely. It was just a unabashedly strong report, a really nice report to sort of stick under the tree. The jobs number was double, essentially, what I had been predicting. So it certainly surprised to the upside, certainly compared to the consensus forecast. It was just a really good report.
Gordon, what's your take on wage gains? Because we did see those tick a bit lower on a monthly basis, but did really beat expectations if we look at that year-over-year gain. What is really your take on that? Especially, we're staying ahead of inflation, but not really seeing a major acceleration on the wages side. So where do you think we're going?
Right. So certainly it's encouraging that we're starting to see, to the extent that there's some tightness in the labor market, we're starting to see that show up in the earnings of non-supervisory workers. So there's more blue-collar workers. You're starting to see those wage gains sort of exceed those of all workers. But you're right. I think there's some room to go there, and we would certainly like to see that number, the year-over-year gain, get over the 4% threshold. That's certainly what we would like to see. Though, when you take a step back and look at, for example, the Employment Cost Index, which is a more comprehensive measure of compensation for workers, it's sort of tracking what productivity is. So, that takes into account some of the other forms of compensation I think workers are increasingly more sensitive to. But you're right, we would like to see wage gains accelerate.
I saw something. I read your little blurb on the jobs numbers, and I had a question for you because one of the data points was really interesting, and it was that for blacks and for Hispanics, the unemployment rate has actually gone up, and for Asians, it's gone down 0.3%. I've never seen somebody report on that before, so I thought that was interesting, and I don't know if you have a comment on that.
Right. Yeah, so we actually, those are figures that we track monthly. Those numbers do tend to jump around, usually, a few tenths of a percentage point every month. And that's kind of what we're seeing. Every month there does tend to be a little bit of movement there, and none of the movement there really pointed to a particular trend, but you're right, those do bounce around, but we think it's important to comment on how the economy is affecting everybody.
Yeah.
Well, when we talk about how the economy is affecting everybody, consumer sentiment is one thing that people pay attention to. The University of Michigan's gauge of consumer sentiment for December rose higher this month with a preliminary reading of 99.2. That's well above November's final level of 96.8. And the consumer, Gordon, as you know, has been one of the points that people point to when we talk about the economy staying steady here. It's averaged 97 over the past 3 years, so a pretty impressive update we're getting here. Are you in the camp, I should say, of the idea that the U.S. consumer has stayed strong through all of this and is still holding up?
Well, clearly, the U.S. consumer is on the order of 70% of the economy, and when the labor market is as strong as it is, and of course we would definitely like to see higher wages and earnings for workers, but with 3.5% unemployment. I mean, the U6 number, that's the most expansive measure we have of unemployment, is at 6.9%. That's a tenth of percentage point off of its all-time low. I mean, this is just a really strong labor market. People are working. People are seeing some raises, and so clearly that's buoying the economy. So I am in that camp.
There were a couple interesting, I don't want to say devil's advocates out there, but a couple interesting points we got from some people. A couple of them, Pantheon, noting that it's hard to square the leading indicators, all of which tanked in the late summer and early fall with the strong numbers we're getting now. And then also Grant Thornton's chief economist, Diane Swank, highlighting the fact that the manufacturing sector actually appears to have lost jobs after adjusting for the return of GM striking workers and those laid off due to the problems that they had there. So, I mean, what do you read into that? Because a lot of the concerns that still exist when we think about the economy are over the trade talks and where things go on that front and how companies are thinking about reinvesting in their companies. So without that answered, what are your thoughts, at least in manufacturing?
So I definitely agree with that view. If you look at the industry breakout in the jobs numbers, to be sure, goods producing, added on the order of 50,000 jobs last month. But let's recall, we're now putting back those 40,000 GM workers that are back to work. And so when you net those out, it's about flat. and that's pretty good when you consider the disruption from the trade front. But the ISM index clearly showed that manufacturing is continuing to have distress. It's just the case that the U.S. economy doesn't have a high the concentration of workers isn't in manufacturing anymore. So it doesn't quite show up at the overall top-line jobs numbers.
Well, we got that update today from Larry Kudlow on the China trade talk front. Right. He was a little bit more optimistic than what we've been hearing lately. Sure. I want to just play a piece of his interview on CNBC this morning for what he had to say.
The deal is still close. It's probably even a wee bit closer than when I first made that statement in November. The reality is constructive talks, almost daily talks. We are, in fact, close. There's no arbitrary deadlines here, okay? There's no arbitrary deadlines. But the fact remains December 15th is a very important date with respect to a no-go or a go on tariffs.
So there you go, no arbitrary deadlines, but still very much a deadline to keep in mind here. And it comes as China said it's in the process of waiving retaliatory tariffs on imports of U.S. pork and soybeans. So, Gordon, I mean, you listen to that. Is that all signs in your mind pointing to positive updates on U.S.-China trade, or still concerns about that December 15th? Don't want to call it a deadline, but deadline.
Well, I mean, we know eventually China is going to need to buy soybeans and pork. Certainly they've gotten quite a bit. They've managed to shift some of their demand for soybeans to Brazil, but that can't persist forever. So they're going to need to satisfy that demand in their economy. So eventually they're going to need to find some kind of accommodation there. But let's also take a step back and recall that this doesn't get at sort of the totality of our disagreements with China on trade. It doesn't get at some of the new fronts that the administration seems to be embarking on to fight this trade war with Europe.
Yep.
So I am still one of those observers who's considering that trade remains, I think, a drag on economic growth.
All right, and we'll see what the latest jobs numbers might do for Fed thinking next week. But for now, seemingly strong showing and more support for holding steady here. But Gordon Gray, thank you so much. Appreciate you taking the time.